Well, that is the day so far, and it's been volatile first hour, 2 hours, but then it's been absolutely steady. 150 points on the Nifty is what we have. We are coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reeman will be here in the studio, and of course Nigel is joining in from the newsroom floor. Guys, hi, good afternoon. It's what can one say, right? I mean, the volatility, the up and down continues, but for the last I think 3 or 4 hours now, actually 3.5 hours, it's been more up and up. So the volatility that we saw, and there was a fair bit. I mean, the market actually rallied quite a bit, sold off, went into the red, and then came back up. And since then, it's not looked back. But that's all in the first 1.5 hours or so. Yesterday's high of 21,964 perhaps is the first number which the Nifty will take to look to take out. Nifty Bank is down and out, and I said this in the morning as well. Maybe the Nifty Bank is perhaps going to see a retest of 44,429. No help at all. I mean, it is not participating when the market is up and is underperforming when the market is down. So that's the weakest part of the market. The IT index, surprisingly, is up 3%. Now, that's a topic which we will discuss and debate. Infy, TCS, both are up 4%. Is this just fleeting, or are people going to take, are taking serious sort of bets here on the IT services space? Just one point. The Nifty CPSE index is still, the last I checked before I walked in, it was still up. Okay, it's come off quite a bit, about 0.25%. But on the weekly charts, the RSI, the relative strength index, is 95. That is, the definition of overbought. Now, does something need to happen immediately? Sometimes it does. In any case, if you're in that space, trading that space, with that kind of a reading, you have to be very, very careful. Global action is once again in a bit of focus because, global markets actually did not matter, right, for the last so many, when the market was moving up with or without global help. But I think it's starting to matter at the margin a little bit because of two reasons. Why the US market has not had any significant correction at all, even though we had a short fortnight pullback. And secondly, yields are jumping in the US and dollar is rising as well. So will that become a factor, something to keep and take note of? Rima.
Hi, IT is doing a lot of the heavy lifting.
Yeah.
So if you pull up the contribution plate, it's not just banks, even heavyweights like Reliance Industries, ITC, they're all weighing on the benchmark index, and it's countered by the strength in IT, and even L&T on the way up is providing that support. That contribution plate will show you that picture. On the PSU side, it's been a bit mixed. So on the gaining front, you've got BPCL, which is up for 5.7% now. But on the losing side, the top loser is Power Grid, so that's down close to about 3%. So today the picture is a bit mixed, and Britannia, which reports numbers, I think numbers should come out post-market hours, but Britannia is down about 1.6% ahead of its numbers.
Well, hi guys. Yeah, I guess it's more about individual stories and stocks that the market is tracking. And case in point would be some of the earnings reactions that have gone down really well with the market. Idea Forge, the drone maker, for instance, is still holding on to the bulk of that gain, almost 10% higher. Triveni Turbine. So mid caps, wherever numbers have gone down well, my God, really, how do you even describe it? Look at IOC, BPCL, HPCL. Look at something like an Indian Oil right now. Petronet LNG, of course, the added buzz today is the conference that's underway in Goa, and there's some talk that maybe India will get to extend its long-term supply contracts on LNG with Qatar. It could be at rates which are below market rates, actually very competitive rates. So maybe that's sort of added some flair. But oil and gas and a lot of the PSU oil and gas stocks, they are really the flavor of the afternoon now all over again. So I guess, Nigel, I think the only crib here is the bank Nifty. Otherwise, the market's got a nice rhythm to it.
Well, indeed, just take a look at individual stocks in the broader markets, the way they are moving around. Take a look at SAIL. The stock has spiked up and spiked up in style. It's now up close to around 5.5%. Majority of that move has come in this hour itself. You have HFCL as well. That's another stock in there. It was more or less flattish. That's taken off in the last few minutes. And Jamna Auto, Jamna Auto looks like it's breaking out of a multiple downward trending trajectory. Just take a look at the intraday chart. Now that stock is up close to around 10% as we speak. So individual stocks, they are doing the thing of their own. So plenty of entertainment out there, and 1,500 stocks advancing in comparison to 700 stocks that are declining. The big questions on the index itself first. How do you position yourself in the final hour of trade. And to help us out with that, we have Ashish Kyal who joins in. Ashish, what do you do with this market? You know, we seem to be in that range. Every time we are going to around that 21,650, 21,700, we're seeing some kind of support at those levels. On the upside, do you think we have enough with today's up move to get past the recent high, which is at around the 22,120 odd?
Hi, afternoon to you and all the viewers. If you look at the index, we can clearly see it is moving in a very broad range, and it is moving in alternate days up and down move. Yesterday we saw some kind of a sharp selling, and today again we are trying to see that recovery. Post the budget on 2nd of Feb, we saw a huge rejection from 22,120 odd lifetime high levels. So I think it is essentially moving in a range with 22,050 as a important hurdle on the upside, and the downside support for the index is around 21,650 odd level. So that's the range. And if you look at the derivatives data, we can see there is build up on the 22,000 side on either of it. So there is not much of a conviction, because even 22,000 calls and puts, we can see there is a large amount of build up on both the sides that we can see. So there is kind of a short straddle in place, what I'm making out. And I think the market is going to be in range unless we break about that 22,050 mark. Having said that, the strategy for now can be possibly use kind of a dip if you get anything around 22,850 as a buying opportunity, keeping 22,750 as a stop loss, and expecting the index to move toward 22,970 odd levels.
Okay, thank you very much for that. Let's talk about
21,970. Sorry.
Got it. Thank you, Ashish, for that. Let's talk about IT. That's clearly the sector of the day. The index is up nearly 4%. There is an HSBC note. It's titled Jumping Ships in Slow Water. The reason is they've upgraded TCS to a buy. At the same time, they've downgraded Infosys to a hold. They're saying that Infosys' valuation gap to TCS is narrowed to only 10%. But the near-term growth and margin outlook for TCS is superior. In fact, TCS is the least volatile business and stock in the sector. And also, particularly on Infosys, they're saying it's difficult for the company to surprise positively on margins, which is the consensus expectations, because once growth recovers, the company will have to start hiring. If you remember, the company has been cutting down its headcount for the last couple of quarters. The utilization has inched up. So the minute demand picks up, according to HSBC, the company will have to boost its headcount, and therefore margins may not increase or may not positively surprise. That said, they're also saying mid-cap IT is showing cracks. Now remember, mid-cap IT went through an extraordinary outperformance over the past 2 to 3 years, but now in the Q3 numbers, HSBC is seeing companies struggle a bit on profitability, and they believe the pressure on mid-cap IT is likely to remain in the short term until demand meaningfully picks up, which according to them is a bit unlikely. But I think the key thesis is between Infi and TCS, they're saying their vote is for TCS. We have with us, I think, Hemang Jani now, market expert, joining in. Hemang, between Infi and TCS, do you have a preference? I think stock-wise, Infi's underperformed TCS to some extent, considerable extent, given the number of downgrades that we've had on its growth outlook since the beginning of FY24. But which one would you bet on right now?
Yeah, good afternoon, Rima. I think clearly when we look at the last, let's say, 1 year or so, the performance and the, management commentary has been relatively stable when it comes to TCS. Infosys, we keep getting a bit of surprises, both in terms of guidance revision and also on the, deal wins, etc. So I think Infosys is about 10% cheaper. It would be much better to stay with TCS, given a slightly better visibility in terms of growth and much better commentary going forward. So surely it would make sense. And also, Rima, I think post the numbers and the way things are panning out in the US, if you see the technology space and the commentary which is out there, actually is reinforcing the fact that you will see much better growth environment over the next 2-3 quarters. So there is some sort of a realignment that is happening in terms of the sector weightage when it comes to IT in Indian.
Rima, in some senses, it could also, are analysts saying that it could be the strong run of growth data points in the US, that maybe we will actually again, it's that old thing, right? Soft landing, hard landing, what kind of landing, no landing.
But at least from the companies, the commentary in the December quarter has been very non-committal.
Yeah.
You've only had, one TCS, which kind of indicated to positivity surrounding the BFSI vertical. You had Wipro, who used the word, the man theory used the words, some green shoots in discretionary spending. But other than that, across mid-cap and large-cap IT, no one's talking about an immediate demand pickup.
I remember Infosys kept reinstating that
It's
the
status quo
same as
right now.
Q2, nothing has changed in Q3. At least they were very emphatic in sort of pointing that out, right?
But sometimes prices move, right? And markets are collective wisdom, and no one can see the future, not even companies. But yeah.
So basically, IT topped out in January of 2022, right? And it started picking up only in April, May of 2023. So from Jan 2022 to almost April, May of 2023, IT was, declining. At that time, the IT companies kept saying that all is well. And it's not that you started seeing cracks in their financial performance, right? The recovery in IT only started around April of 2023, which is when Infosys first downgraded their guidance. When they came out with their Q4 numbers, they downgraded their guidance, or they indicated to weakness. And the minute they did that, you've started seeing the IT companies, recover. So basically, stocks end up moving much before the IT companies come out and, signal the turn in the cycle.
Absolutely. And actually, if you think about it, if your view is, a macro, broader view is that the US economy is going to do just fine. Right. One way to play that, actually one of the only few ways you can play that directly is IT services, right? It's a trade, it's a view. You're expressing that view through a trade, buying Infosys, TCS. And maybe
TCS
it's just that.
said something which made sense to me. They said that US, the large corporates are very quick to react to the macros. So the minute they start seeing things are going difficult, they turn off the spending tap. But the minute they start seeing hope things are improving, they will turn on the tap very quickly. So their decision making in that sense is very fast. So the minute the macro turns and the companies have confidence, corporate behavior in the US could change, which will be positive.
I learned something very interesting, which I did not know. For this quarter, for which US is reporting numbers for fourth quarter, right? For them. The earnings for Russell 2000 companies is down 25%. Profits are down 25% for Russell 2000.
Wow.
I didn't know that.
The market has its own way of...
And by the way, no, the index has not performed. Russell 2000 is
compared to the NASDAQ, etc., it's been an underperformer.
No way. It's actually lost money, right? NASDAQ is up 30%, but this has lost money. And one of the reasons is because these are smaller companies and all of them have got debt, which is very difficult to refinance at these rates, these high interest rates. So, a very big dichotomy playing out there as well, where the big tech is leading NASDAQ higher, but Russell 2000 index is underperformed, and earnings, for good reason, is down and out as well. Hemang is okay. I think Hemang will get in once again in just a bit. But Petronet LNG is the other one that we want to talk about. Sources say that the company is likely to sign a multi-billion-dollar deal to extend LNG imports from Qatar. Petronet LNG, of course, gets in LNG, regasifies it, and supplies it. Sonal is here with more details on this one. Sonal.
Well, it's a PTI story because there's a lot of action happening on the sidelines of the India Energy Week, and that's where these updates are coming in from. One of them says that Petronet LNG will be signing a deal with Qatar to extend import of 7.5 million tons of LNG in a year. And the important bit here is that price will be significantly lower than the current price at which it is being imported. Petronet currently imports around 8.5 million tons a year of LNG from Qatar. This is via 2 contracts. The first contract is a 25-year deal, which will expire in 2028. So there is an extension that has been decided on, according to reports, which will be for around 20 years. The second deal is for 1 million tons, but it happened only in 2015. So that will be negotiated separately because that is also a long-term deal. Now, the current deal is priced at 12.67% of the Brent crude oil prices because there's a slope. It's a percentage of basically the crude oil prices. That's how gas prices are mapped when it comes to imports, plus around $0.5 per MMBTU in terms of the external or the additional spread that will come on those gas prices. So this is something which is lower than the previous rates at which the LNG was imported. Additionally, there was a fixed charge of around $0.5 that would be scrapped according to sources, and India will also save $0.3 per MMBTU that it incurs on shipping. This is according to the details of this particular agreement. Of course, it's not finalized, but if it does come by, it would mean savings for Petronet LNG in terms of LNG imports. It's not only Petronet. A Bloomberg story also suggests that Qatar is in talks with GAIL, IOC and the other LNG players as well. So this is a space that we'll be watching out very closely. For now, the stock is higher in trade.
Oh, yeah, absolutely. I caught that as well. So a lot of the agencies, wire agencies are talking about it, PTI, Bloomberg, that Qatar is out to woo Indian oil and gas companies. Petronet is, of course, one of them. And maybe, we managed to get pretty competitive rates as these long-term contracts are renewed. Hemang, good afternoon. So, come in on this, not just Petronet, but just whatever's happening in the oil and gas space, even with the refiners, IOC, BPCL, these have been absolutely euphoric moves. What is your take? Do you like any of the stocks here?
We've seen a massive re-rating across this oil and gas and many more PSUs. But particularly this, oil refining companies, though we may all debate and argue that they have really moved up quite a lot from the low. But if you look at their valuations, if you look at their cash flows, it's not looking like, they're out of whack. HPCL is still at about 1.2 price to book, blowout quarter. And if the crude prices remain somewhere here and there, 5% plus or minus, again, you will see a decent growth. So I think this is one theme where majority of the market consensus of analysts have a slightly negative view because of the legacy issues. But the current trend in the numbers, the valuations, return on equity, it is all pointing to some sort of a positive traction. So within the PSUs, if I have to pick, I would definitely go with something like BPCL, IOC, Petronet LNG, GAIL. These are the names where we still feel that, there is a lot of, comfort in terms of valuations and growth both.
All right, Hemang, I wanted to ask you about the real estate space. And Godrej Properties, yet another quarter of record bookings. Did you have a look at those numbers and your view on the stock?
Good set of numbers, highest ever bookings, about 57 billion up, almost 76% YOY and 14% quarter on quarter. And on many parameters, when you look at the real estate numbers, they're looking quite decent. The pipeline continues to look good. Only issue is that stocks have run up, so valuation comfort may not be there, but good to have as a part of slightly high beta portfolio, both Godrej Property and also Lodha. These are the two preferred names that we have at this point.
Okay, all right, Hemang, stay on. We will take a very quick break. We have some more questions for you. Come back in a bit. And also, on the other side, we will have with us Anish Davakle of ICICI Prudential AMC. We'll get their view on the market as well.
Okay, welcome back. The market's up 155 points and it's looking pretty good, all told, and very unlike the early 1.5 hours of volatility. Will we see more of it? Last 3 days, remember, the market's come off. By the time we've shut shop, we've been sharply off the day's high. Yesterday it was 200, it was almost 300 the day before, and of course, I mean, last Thursday it was about 170 odd points or so. So, after all of that, this is a decent pullback if we manage to end with these gains. Anish Tawakle is now joining us. He's Deputy Chief Investment Officer Equity at ICICI Prudential Mutual Fund. Anish, good afternoon. Great to have you with us here on CNBC-TV18. It's a pleasure.
Good afternoon, Prashant. Good to be here.
Good to have you, and I hope this is the first of many. You folks at ICICI have always known to be contrarian. But now the problem in the market is that you have to find stuff to be contrarian on, right? Over the years, you bought power stocks when they were down and out. You bought, other things which were very cheap. PSUs, for example, early on. But compared to historical valuations, very few sectors actually give you that comfort now. So what's the thought process? What's the approach from the investment team at ICICI Pru?
So, Prashant, basically, look, you get returns through two sources, right? One is multiple expansion, the second is earnings. I would agree with you that multiples have expanded pretty much across the board, and there are no sectors that are screaming cheap at this point. I don't think we can identify any. But fortunately, the economic outlook, at least from a cyclical perspective, is positive. And the earnings growth trajectory we do expect over the next few years should be healthy. And when you have an economy that's poised for a cyclical recovery, it's the domestic cyclical sector that we kind of expect to do well. So this would be sectors like automobiles, cement, industrial and capital goods, normally financials. This time I would say financials other than banks, so insurance companies, asset managers. Broadly, the domestic cyclical space is where we are positioning ourselves.
Anish, you've led me to the next question. Hi, this is Rima here. Why not banks? Last year, everyone we spoke to said banks are a screaming buy, the asset quality is under control, loan growth is picking up. Yes, NIMs will moderate, but it won't be such a big hiccup. Why have you been cautious on banks, and what's the view from here on?
Oh, so our view was that everything that could have gone right for the banking sector had gone right, and the competitive intensity was increasing following the consolidation that had happened in the banking industry or in the financial industry more broadly. So the fight for deposits we expected was going to be very, very intense, and that is playing out as we had expected.
Anish, just stay on. You also did mention that you like other stuff in financials. You like NBFC, you like insurance. So just hang on there because we want to get some more sort of perspective in that thought process. But insurance is making headlines this afternoon in any case. A lot of insurance stocks are up and about. HDFC Life, by the way, last I checked was up about 4.5%, 5%. Ditto for Max and a couple of others as well. Even ICICI Prudential, Lombard, ICICI Pru Life, all of the stocks are up and about. So here's the news. The Parliament Committee report on finance has been tabled in the Parliament today, and a lot of recommendations are being made about the insurance sector, including things like maybe composite licenses, perhaps lowering GST on certain type of insurance policies. So let's go across to Parikshit to understand some of these details. Parikshit?
Well, the Parliamentary Committee on Finance has met officials from the industry, from IRDAI, the Ministry of Finance, and has looked at ways to strengthen the insurance sector in India. They have noted that it's going very fast in a very robust manner, but at the same time, insurance penetration remains very low. Now, one of their top recommendations is rationalizing the GST rate on insurance products, which is 18% at present, and specifically, they speak about health insurance products, particularly retail policies for senior citizens and micro-insurance policies. These are sectors or products where the tax rate can be rationalized. Also, the capital requirement, the minimum capital requirement of 100 crores for companies to enter the insurance sector. This, they feel, needs to be rationalized so that smaller niche players can enter and cover wider geographies in the country. a composite license must be considered. Now, this is something which is complicated. It will need amendments to the Insurance Act. And this is what the Finance Ministry has recommended, that if you bring this policy with a composite licensing arrangement, that could give a major push to the insurance sector. The Ayushman Bharat scheme, they have pondered over this in great detail and said that if you allow the missing middle to participate, it can become effective for a very large section of Indians. There should also be a roadmap to strengthen the four public sector insurance companies, and disinvestment is one of the options to strengthen them. And finally, they have said that IRDAI must consider instituting an ombudsman to deal with consumer grievances on the lines of the RBI.
Okay, all right. Thank you very much. All important points there. Thanks, Parikshit, for bringing us up to speed on what those recommendations are like. Anish, so now to come back to your point, you mentioned that, you're sort of looking away from banks, and I guess you're a bit ahead of the curve because the market's only waking up to that reality now. Tell us, what do you feel about, the non-bank lenders and also areas like insurance, where there's a lot of regulatory action, whether it's higher surrender values or these tax tweaks that we keep seeing. So, the regulatory piece, would that not be an overhang?
Yeah, so the way we see the financial sector broadly is there are three sources of intermediaries between savers and investors. You have banks and NBFCs, that's one. Second are asset managers, and the third are insurance companies. Now, in a cyclical recovery, normally both savings and investments pick up, and you should see strength across the board. This time, our view was that in the banking and NBFC space, there would be heightened competition, so we were a bit cautious there. But the other two would still be beneficiaries of a cyclical recovery. So asset managers and insurance companies, we've been positive on. Of course, there are regulatory, issues that can keep cropping up, and that you kind of handle by how big an overweight or underweight how big you take a weight you take based on your risk appetite. But the underlying cyclical trend was positive.
By the way, important statements from Bharti Airtel about capex will moderate from FY24. This was the big thesis in the market, that Bharti Airtel and Reliance Jio have both front-loaded their 5G-related capex. But now that they've met their rollout plans, both these companies, they've achieved whatever they wanted to in terms of rollout. Going ahead, FY25, the capex intensity will come down, which means there's more money in the hands of Bharti Airtel, and maybe we could see that being given out to shareholders via dividend. So, the company coming out and saying that we will see a moderation in capex in FY25. I'm just trying to see if they do hint anything about a possible tariff hike post-election. I'm sure the investors will be asking them.
No, absolutely. And stocks up about 2.25% right now. Anish, let's just, PSUs are not a one homogeneous group, right? I mean, it's just defined by ownership, but it's so vast and varied. But you guys were sort of positive early on, and now you find valuations and levels less favorable there. But we're still seeing, mutual funds launching PSU funds. So fresh money coming into that space, will come into that space if this continues. What are the areas which you still are bullish on, where one can still allocate within the space? As defined by ownership, as I said, it's not homogeneous, but if I were to use that PSU as a basket, where is their value, or what will do well, according to you?
So, as I said, there's no area which is extremely cheap at this point, and neither are PSUs that cheap anymore. See, the reality is that the outlook and performance of the PSUs have improved, and some of the re-rating is justified. But at this point, at least our view would be that, they are closer to being valued fairly, and one should gradually be taking money off the table.
Take money off the table. Just a quick word on autos, which you do like. What's the thesis here, and what specifically? Are we talking about two-wheelers, tractors, commercial vehicles, four-wheelers? What segment there and why?
So we are more positive on two-wheelers and passenger vehicles. I think in a cyclical recovery, these are discretionary items of spending, right? When the economy is soft, these are the items that drop disproportionately. And correspondingly, when the economy picks up, that's where the incremental output comes from. So both two-wheelers and four-wheelers, and particularly at the bottom end, right, we feel that as the economy broadens out, you would see a stronger recovery in these segments.
You know, Anish, I just want to sort of chip in over there with another question. Since you're talking about the whole, industrial thesis and you're still positive on that space, the thing is that, earlier on, a couple of years ago, you guys were the outliers, the anti-consensus call of looking at a lot of these capex stocks. But now that has become the market call and all these stocks are, they're running through the sky. So what is the approach you're taking on industrials, the whole capex theme? How do you find valuations now, given previous cycles and comparisons? And how are you going about deploying money here?
So the approach we take is that, look, are earnings upgrades more likely or downgrades? Right now, it's not a game of multiples. Multiple expansion has taken place, and we are not betting for further multiple expansion. It may happen, but that would be upside and the cherry on the cake. But we are looking at earnings outlook, and the view is that if the economy gains further momentum, which we do expect it to, you are more likely to see upgrades in these sectors than downgrades. And we will change that, when we feel, look, the upgrades are done, the models are being stretched to a point where, upgrades are very unlikely and more likely that companies will start disappointing. That's when we'll switch.
Okay, so within that, I mean, are you more comfortable right now, let's say, with a lot of the heavy engineering companies on the capital goods side, or are you looking at, contracting firms? What? Because
Both,
it's a large
actually.
complex, right?
Look, when you run a large portfolio like ours, right, basically you do have to look broadly for opportunities. And we find industrial and capital goods, automobiles, cement, across the board, right? You can, if they do well, they'll all do well together, right? The earnings upgrade should come through in all of these sectors. If the economy doesn't deliver, then you'll have problems across these sectors. It's not like one sector you can pick and say the other one will not do well.
Did you guys see that story, by the way? Hyundai apparently is coming out with an
looking
IPO.
to list in India. And I think $2.5 billion, I think that's going to be the size of the IPO. Some of those reports are to be believed.
So I went and looked at what Hyundai's market cap in Korea, which is the home country, is. It's about $37 billion. You know what multiple it trades at? 5 times.
5, yeah.
5 or 6 times earnings. PE.
Price to earnings.
Well, yahan to,
It'll start at some 40 times.
40, 50. And so the point is, it's got, by the way, dividend yield there is 14%.
Wow.
It trades at 5 times. So the question is, why not?
Why
the market
not?
is giving you the multiple, gather it. So I think, it just sort of struck me as he said that Anish was saying that he likes the auto space. Anish, just a quick word on cement as well. That's the other space that you like. What's the thesis there?
Look, I think home building and urbanization will be a key part of the growth story going forward, right? And if you see home building, etc., taking place, then cement is certainly going to, volumes-wise, do well. And this is a material that can't be imported, exported, right? It's a very local market. So if you have strong positions in the local markets that you operate in, you do well, basically. And our view is that urbanization and home building will be a key driver of growth. In fact, if you look at how the economy has shaped up and what's driven the recovery, it's basically coincided with a pickup in home buying. The inventory is cleared and then home building activity has started. So home building is central to this thesis of the economic recovery, and cement is a clear beneficiary of that.
Anish, I remember that a couple of years back, you used to look at IT very closely. We haven't spoken about your view on technology in the current cycle. Now, the stocks have already done well, considering the financials they've reported over the last 9 months. What's the call on IT?
So our published portfolios were slightly underweight IT. We don't think that growth will be spectacular. I mean, this should be a normal kind of year for IT, for the IT industry. See, in a normal year, IT services industry grows 3 to 5%. Indian companies grow faster because they gain a little bit of market share. This should be a normal sort of year, right? Then additional benefits the IT industry gets if the rupee depreciates, which is not our view this year, right? We don't expect big rupee depreciation this year. So IT, we are slightly underweight.
Anish, before we let you go, any sector or any particular area of the market where you see froth, where you really think that there are excesses and something you may want to red flag for our viewers?
I think small and mid caps are an area where we are seeing a lot of froth. That's being driven by flows. And I think people are extrapolating peak profitability and very strong growth for very long periods of time. So in the small and mid cap space, we'd be careful.
Anish, great conversation, and we look forward to more conversations with you. Thank you for joining in.
Thank you very much.
We'll slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our technical expert.
Welcome back. You're tuned into Closing Bell, and we are coming to you live from the Motilal Oswal newsroom. Well, the markets are holding with good gains of around 160 points. The Nifty Bank is doing a relative underperformance. It's a good time to get in Nimesh to tell us what's going on in D Street Chatter. Well, Nimesh, today at least we're not seeing like yesterday, right? When Closing Bell started, suddenly the markets got a little bit jittery. Today we're holding on to those gains. We're on the flow situation.
The gains, right?
Exactly.
I mean, after a minor gap of we've seen at day, it's almost at day's high.
Yes.
But the good part today is it's largely led by the large caps, and within large cap, this is a technology stocks which is helping the bulls to rally so much. And the good part is today's technology rally is led by FI buying as well. So there is institutional chase happening in the technology stocks in today's trade. The index is up 3%. A lot of individual names up between 3 to 5%, 7% as well. So technology as a basket has been well bid today, is what I understand. A bit of profit booking though in select PSU names. So PSUs now has to be classified into different groups. Now there is a bit of rotation as well happening within the PSU basket. While the momentum in OMCs continue, some bit of profit booking is visible in the power PSU, so to speak, even for that matter in the bank PSU. So
yes,
the PSU bank index is down 1% in today's trade, despite the fact that there is so much of momentum in the PSU basket. So the feedback is while there is a lot of momentum in the PSUs, now watch out for some signs of profit booking as well. And not every PSU is going to go up from here. In fact, a couple of days back, there was a feedback as well that one of the large mutual fund has started booking profit in the PSU stock. So that's been the trend across other funds as well. So now there is a bit of a divided street. Not everything in PSU is going to go up. That's the clear message as far as dealing rooms are concerned.
Appears OMCs and metals, at least both of them are doing two pockets of strength out there. But Nimesh, individual stocks, give us a sneak peek. Give us some more stocks. What are you looking at?
Sure. So in terms of individual names, the first is I've classified a couple of stocks where there are going to be large blocks expected soon. So watch out for Vedanta. There's going to be a large block very soon. So that's one. Mankind Pharma, you'll see a large block in Mankind Pharma as well. I understand some buy-side analysts are already been approached. So I expect a large block there as well as in L&T Holding Finance. So these three are the large blocks which are expected in the days to come. So watch out for that. The second stock is SJVN. I spoke about some bit of profit booking now in select PSU names. SJVN stands out. Big sell flow is what I understand from the larger FIRS. And looks like some domestic mutual funds are now looking to book as well in some of the big movers in the last few months. So SJVN is on the negative side. The third name is Infosys. While entire IT basket is doing good today, Infosys has largely been outperforming on very, very strong buy flow. So some bit of interest seems to be back in the IT names, and Infosys stands out and large buy flows. And the last one is BF Utility. After a long time, some bit of buying traction seems to be back in this particular stock. A bit of momentum off late, and I understand a leading influential HNI investor is an active buyer in BF Utilities, and hence a big up move in that stock as well.
Okay, all right, got that. Lots of interesting stocks there. Thank you, Nimesh, very much for the latest. By the way, looks like there's confirmation coming in on that news that agencies were talking about this extension of the long-term mega contract with Qatar that Petronet LNG has. So we don't know the exact terms of the renewal, but the expectation was that the terms are going to be far more favorable this time around, with the renewal happening at lower than prevailing market rates with respect to LNG imports coming in. And there's a bit of a sell-on news playing out now on Petronet LNG. Okay, let's get to Ashish Kayal then and get some more ideas in terms of what to trade. Ashish, thanks for coming back. So tell us, it's been a pretty decent day as far as the market is concerned, ex of banks. Final couple of minutes, what would your advice be?
See, if you look from the index perspective, I think, as I said earlier, it's a range bound, and Bank Nifty is especially something that looks weak to me. So I'm going to be a little cautious about where the overall index is headed. Bank Nifty is still not trying to show any kind of a positive tick. It's still down by 150 points, and that's where I am cautious. But if you look at IT and pharma, those are the sectors and the stocks I think are going to buzz around. So if I have to bet for tomorrow, I'll rather bet on the individual names and individual stocks. And on that side, I think the first one I'm going to look at is Emphasis. We can clearly see a very strong move in Emphasis over in today's session after a long time, and the stock formed a low around 2,480 odd levels and showed a very good recovery from those odd levels. And I think the volumes are also picking up. So Emphasis can be a good stock for buying now and maybe selling tomorrow for the target of 2780 on the upside, and we are maintaining a stop loss of 2490. And the other stock is Ipca Labs, which is on my radar. So if I get any kind of a dip in Ipca Lab, that can be a classic opportunity to buy. It showed a very strong breakout in today's session. The pharma stocks are buzzing around, and I think the momentum will continue from here. So one can create long positions in Ipca Lab, aiming for 1290, and on the downside, maintain a target stop loss of 1155.
Thank you, Ashish, for that. Today's new listing, BLS E-Services, has had a blockbuster day one. The issue price was 135. The stock is now trading at 370. It's up 175%. It was a small issue, but it's had an overwhelming response. Just a quick word on what the company does. The company has various touch points, about 98,000 plus touch points in India, particularly centered in tier 2, tier 3 cities. where the company provides banking correspondent services, which basically means in places where you don't have a bank, you can, this banking correspondent can provide banking services like opening a deposit, whether it's asking for a checkbook, all the bank-related services. They also get about 28-30% of their revenue from e-governance services, which basically means it will help you get your Aadhaar card, your PAN card, do your KYC, birth certificate, death certificate, land records, etc. And there is a very small portion is assisted e-services. In that, the company is saying that we anyway have touch points, so we can provide a lot more, whether it's even e-commerce for the people. Now, the reason why the stock has done so well on day one, it had seen very strong subscription. The overall subscription was 162 times. Two, the company's footfalls at those touch points are close to about 4 lakh people every day. And the business model is that you increase the number of touch points and you try and cross-sell more to the people who come to your touch points and basically try and earn more money out of them. Third, the revenues for the company aided by acquisitions have gone up at a pretty fast clip. In FY21, the revenues were 65 crore. It's now gone up to 243 crore, aided by acquisitions, as I said, particularly on the banking side, and the company is scouting for more acquisitions. Also, the company's margins over the last 18 months have been fairly steady, between 14 to 15%. This is at the EBITDA level. So that's about BLS e-services. The stock right now is up 170%. Here's what we'll do. We'll slip into a very short break on that note. On the other side, we'll invite Jay Bala of Cash to talk about the market technicals.
Welcome back. You're with us on Closing Bell. We're in the last leg, and we have Jay Bala of Cash the Kiosk with us. Jay, hi. Good afternoon. Good to have you on the show. So the market's trying to sort of get its mojo back. Banks are not playing ball. But then you have, today, for instance, IT has come up and made up for it. What is the sense from here on? A lot of sector rotation playing out. What levels are you eyeing on the Nifty?
Yeah, thanks, Shilby. Good to be here. See, the markets are fatigued, and it's pretty obvious when, a couple of sessions ago, when the markets tried to push to new all-time highs, it got rejected and markets came down by 300 points. But, as I've been saying for the last couple of weeks, the Nifty has been a bit ambivalent, unlike the banking sector. The banking sector is in a slightly firm downtrend. And I've been saying that the floatability of Nifty, or the levitation of Nifty, is quite dependent on Reliance staying about 26.45. So if we see Reliance close below 28.10, that will be the first warning sign that the rally in the Nifty is starting to give way. But as long as 26.45 holds and the January low holds for the Nifty can try to push to a little more higher highs. But it's not a necessary condition, but it's a probability. And if the banking sector had a close below 44,429, that will put the banking index and the whole overall market in a firm barrier. So the banking sector is very crucial.
Okay, all right. Hi, Jay. Good afternoon. Good to see you in. By the way, I think SCI should be a stock that you should keep in focus. In the last 1 month or so, SCI is a stock that's gone one way. But now we're getting some clarification from our Delhi team. Parikshit tells us that there's no active consideration or discussion within the government on privatizing shipping and ports. So SCI is a stock. It went, I think, from around 190 rupees odd all the way to around 270. As we speak, SCI is currently at the low point of the day. Just keep an eye out on that one. Well, Jess, since we're talking about stocks, tell us, what do you have for us on your radar?
Yeah, the PSU sector, whether it be banks or just other stocks within the PSU space, they haven't yet topped. So I like BEL from that space. BEL might be right now. If it closes above 187, it will confirm that the short-term correction is done. It has a potential to scale about 210, but there is a small possibility if the correction is incomplete, can drop closer to 173 and then go to 210. So a stock above 170 makes sense. And the other stock I have is Tata Consumer. I'm bullish on. Once again, similar price structure to BEL. A stop to 1105 and an objective of about close to 1300. I'm slightly bearish on Trent. It's in the medium to long term, it's quite bullish, but there's a potential for a short-term drop to about 2700. So place a stop above the recent high of about 3295 and expect 2700.
Jay, have you had a look at the charts on, IOC, BPCL, HPCL, a lot of these names? Because they've been the best performers of 2024 so far, the oil and gas PSUs, or even, beyond oil and gas, even a stock like Coal India, it's had a great run. Do you see any more juice left in some of these PSU trades?
Yeah, if you recall from our December conversation, Surbhi and I, when HPCL, BPCL were doing, as good as they were doing now, I said there's a pullback due, but that's not the end of the move, and I'm still bullish on the energy space, and they have done pretty well. I was more bullish on BPCL than HPCL, but HPCL has done equally as well as BPCL. So, but this leg is the final stretch, but they are coming close to an important turn. They have not turned, but they're coming very close to an important turn. So some risk management here would make a lot of sense. Lock in some gains. This may not be a major turn, but it could be a short to medium turn pullback from here.
Any thoughts on Frontline IT? Is there any stock where you are seeing a lot of upside?
No, I've been slightly, downbeat on Frontline IT names. I've been bullish on mid-cap IT names from October 2022. And Persistent was my top pick, and that's been the top performer too. The move, still, despite TCS clocking all-time high, a little bit suspect for me. It might have a little more juice to somewhere close to 4,200, 4,300. But I still have, a holdback. The best pick for all within the Frontline IT names has always been HCL Tech. have been the only stock that's been giving a very clear bullish signs since last year. But Infosys, Wipro, and TCS, despite its all-time high, little bit suspect for me. But as long as Nifty IT index can hold about 34,200, which I mentioned 3-4 weeks back too, I know the sector can still levitate up. But if 36,100 were to give way, I will start getting more cautious on the frontline IT names rather than the mid-cap IT names.
Jay, any other trades that you want to put out, positional or otherwise?
I can probably look at something like Suven Life Sciences from the pharma space. I've been bullish on pharma since September, October of last year. So there's still some juice left within the pharma space. But as long as Suven holds above 100, there is potential for this to scale about 140. Bullish on pharma.
Okay, all right. Ajay, I don't know whether I missed that, but the dollar index, that's the one that's been a bit of a worry. So if you could tell us levels you're looking on that one, as well as, from the global scenario, the 10-year yield as well. If you have any view on the bond as well as on the dollar index.
Now, I've been pointing to the pullback in the dollar as not as a bearish trend and as a corrective trend. And yesterday the dollar crosses, have had a significant breakout, and this looks like much higher levels are due for the dollar index. Initial objective is about 107 and change, which is the October 2023 high for the dollar index, and that will be inverse levels for the dollar process, which will be the October 2023 lows. And the 430 bips level is very important when it comes to the US 10-year yields. But given the dollar's price action, I think it's just a matter of time before 430 bips gets taken out. And once that's taken out, it will signal that the next higher up move for the US 10-year yields is due, and that will probably pull all the bond markets in the rest of the world to copy it. Now watch the 238 levels on the German 10-year. That could probably be the first to take out before the 430 levels. If that happens, that will also signal the interest rate cycles is taking a turn.
And Jay, what did you mention was your immediate target for the US 10-year? 4.1 today.
Yeah, I don't have an immediate objective, but if 430 were to be taken out, I would think that the 500 bips that we saw last year, that'll get taken out. This will be the start of the path towards about 570 bips, maybe even 660 bips. So, that will be a significant marker for me. It's just it signifies that the uptrend has resumed for the US 10-year yields and the downtrend for the US 10-year bond prices.
Okay. All right, Jay, we'll leave it on that note for this afternoon. Thank you very much for joining in and giving us your view. Well, while we see how that move on yields plays out, today was a good day. No denying that, because you look at the market, even the Bank Nifty's cut its losses quite significantly, and the Nifty is going home at the day's high with a gain of 170 points. So it's been a slow, steady climb to the top today. And once again, the index is barely 50 points away from the 22,000 mark. So let's talk about what worked. IT, and more IT. So HCL Tech, TCS, Wipro, Infosys, all of your large cap names are right up there. IT was the best performing part of the market. But then you can never finish a sentence these days without talking about PSU stocks. So let me not go too far, because BPCL has had another roaring session, 6.5% up on BPCL. It takes the total winnings of the year so far to 35% on BPCL. And then you have ONGC keeping it good company. Even the others, HPCL, etc., they all had a pretty decent session. And let's not forget some of the other names like Coal India, SBI. So within the PSU pack, these were some of the active stocks, along with Bharti Airtel. Bharti Airtel's results quite well received by the market. The stock was up 2%. However, I must point out that Power Grid was, quite noticeable in terms of a bit of a cool-off. While we're talking about the overall PSU rally, Power Grid managed to cool down a little bit.
Okay, on the losing side, you spoke about Power Grid, but Britannia lost, its crunch ahead of its numbers. So Britannia was down 2.2%, ITC2 giving it company, and heavyweight Reliance Industries dragged its feet, ending with a cut of close to about 0.7%. The mid-caps outperformed. The mid-cap index goes home with a gain of close to about 1.2%, One of the stars of today's trade is the new listing, BLS eServices. You had strength coming through in other PSUs like IOB, IOC. Indiabulls Real Estate gained close to about 11%. Yes Bank was up 11%. And on the losing side, Jio Financial Services gives up yesterday's gains. And Bank of India continues to struggle post its numbers.
So, I mean, just counting down to the final last couple of minutes, last minute actually, just in the last minute of the trade, and we'll have more stocks up on your screen. So maybe look at some of these, broader market names, right? IRB Real Estate, perhaps we can put that up, apart from what we've already mentioned. Big move today. Triveni Turbine is another one, which saw a very large move, and all of these backed by super strong volumes. There is the Triveni Turbine, 20%. Jamna Auto is another one, well-known institutional name, and stock did very well. Latent View, perhaps will come up on your screen. So this is all in the mid and small cap universe. Subex was another one.